Thank you all for welcoming me and the Prospectors and Developers Association of Canada back to Newfoundland and Labrador and the Mineral Resources Review. With PDAC's head office located in Toronto, I respectfully acknowledge that they're on the traditional territory of the many nations, including the Mississaugas of the Credit, the Haudenosaunee, the Huron-Wendat, the Chippewa, and the Anishinaabe. And I further acknowledge that the island of Newfoundland includes ancestral and unceded territory of the Beothuk and the traditional lands of the Mi'kmaq, and I read this in the telly only yesterday, where researchers continue to study the land rights of the Mi'kmaq people. Newfoundland is also the home of a powerful symbol of the importance of mining to our society. And that symbol is a lump of rock in the Presentation Convent just behind the Basilica. The Veiled Virgin was exquisitely carved in marble from the Carrara mine by the 19th century Italian sculptor Giovanni Strazza. It's been in St. John's since 1856, and it's the single most beautiful object in Canada. PDAC, I have to ask, how do I change the slides? Do I do?
There you go.
Oh,
so just advance with the green one.
Thank you. PDAC, well, I think those letters are familiar to most of you, as is our annual convention, which is heading towards our 93rd iteration in March, and I'll touch on that later. But I'll start by showing some of the research that the PDAC does to gauge where Canada's mineral exploration and development industry is trending, how some of these trends influence what's happening here in Labrador, Newfoundland and Labrador, and what we, PDAC, are responding, and how we are responding on behalf of our members, who, by the way, are some over 8,000 companies and individuals, and we respond to any troubling trends that our research recognizes. I'm going to cover a lot of information. I'll start with metal prices, then the investment going into our industry, where it's coming from and where it's going to, and how this money is being spent both at home and abroad. Today's theme is ups and downs, and our industry is bumping along like the rocky road to Dublin. This metals price chart shows metals changes in the full year 2023 and in the first 9 months of this year. The stars of 2023 were uranium and iron ore, and they're both in negative territory this year. This seems to be tied to overshoots in demand expectations, new production coming online in response to the price spikes of 2023, and sales from inventories. Nickel prices have been a surprise, a pleasant surprise, up 5% this year after last year's drop of 45%. The recovery, it's a modest recovery, and it's in part because in response to last year's flood of supply from new nickel mines in Indonesia, Australia's nickel industry and New Caledonia's nickel industries have largely shut down. And you may have noticed that Canada's nickel industry has not shut down. And that may be because our energy costs are lower and greener than those of Western Australia or New Caledonia. So I was gratified to hear Minister Wilkinson say just now that he discussed the importance of electricity to the mining industry here in Newfoundland. Lithium and cobalt prices have continued to decline. Lithium prices are back down to their long-term levels just before the spike of 2021 and 2022, while cobalt prices today are the lowest they have been in 20 years. And the production of both lithium and cobalt continues to outstrip near-term demand for those commodities. In the light of the US election results, what will next year's chart look like? London's Financial Times has provided some small consolation after those results. They pointed out that under the Trump administration, the world got a lot greener. And under the Biden administration, it got a lot browner. And the FT explained that this meant that global events and other dynamics do so much more to commodity markets than whoever's sitting in the White House. The ups and downs continue as we go from metal prices to looking at investments in the global mineral industry. If you analyze the 2024 nine-month figure, global investment is up 19% this year from 2023. That's still down 31% from 2021. And on the positive side, the investment in the sector is picking up in Canada, and the annualized 2024 number is up 57% from last year. And the dashed line on the chart shows that our market share of global investment is up. Canada now accounts for roughly a third of the global figure. And one of the most notable of the annualized year-over-year changes is in Australia, where investments have declined 28% in the first 9 months of this year, amid the shutdown of the nickel industry, the collapse of lithium prices, and as tensions rise between Australia's government and its mining industry, much of the debate between the mining industry and the government seems to be on the new law brought forth by the Labor Party, which is, it's called the Same Jobs, Same Pay Act. But as we'll see in our next chart, there's ups and downs in our own market that skew the picture from a junior resource mineral exploration point of view. Although Canada's overall global share of investment is growing, I must point out that of the nearly $8.5 billion Canadian dollars raised on the TSX Ventures and TSX Ventures in the last 9 months, first 9 months of this year, nearly $2.5 billion represents just 3 separate deals. The biggest was Quantum Minerals. They raised $1.6 billion, and that's 20% of all funds raised this year. Fortunately, the Canadian market has grown on an annualized basis, in part due to a strong gold price and the benefits that come from our tailored Canadian incentive regime, so we've been able to withstand the worst of the market headwinds of 2024. On an annualized basis, although investment into the overall Canadian market has grown, the dollars coming to the venture exchange and the junior segment of our industry have not kept pace with inflation, which is concerning. The strength in junior companies' share prices back in 2021 makes the current levels of funding pale. And remember, back in 2021, what drove investment in those companies was concern about global supply chains. This chart compares the funds raised by mineral industry companies and funds raised by everyone else on the TSX and venture exchanges. And I'll explain, if you don't know what the word issuer means, it's the companies whose shares trade on stock exchanges. And it's a surprise, another pleasant surprise, that our sector has more than held its own against other sectors. More than half of the funds raised in Canada this year have been by companies in our industry, which demonstrates not just the strength in some of the metals prices, but also the importance of government's investment incentives, such as the flow-through shares and the mineral and critical mineral exploration tax credits. And that's why it's so important to retain these market incentives. Our incentives promote primary sources of funding for a significant part of our junior marketplace. They're an advantage that Canadian explorers have over the rest of the world. And here we see that flow-through deals have been the source of nearly $3.5 billion invested into domestic mineral exploration in the previous 3 years. It looks as though flow-through investments will just squeak in above $800 million this year, although there was a slowdown in the third quarter, probably a response to the proposed changes by the federal government to increase the capital gains inclusion rate. This rate has a big influence on how Canadian investors invest their money. We've seen that metal prices have moved up and down, so have investments in the market. What about where these investment dollars are being spent? Estimates from S&P suggest that global exploration spending in 2024 will be down. Canada is the one region that will avoid this downtrend. As a result, Canada's share of global activity will tick up in 2024 to just below 20%, And for the third year running, it will be above the 10-year average of around 17% that you can see in the pie chart on the right. Exploration in Canada should be up marginally this year. Well, why is it up at all? Well, look at the dashed line. It shows the share of exploration that goes to other minerals. Of those other minerals, we've seen a material increase in exploration for electric materials, graphite, lithium, and rare earths. And that's pushing the total number to stay in the black. It's a puzzle, certainly a puzzle to me, that precious metals exploration is up only marginally despite the price of gold. But there is hope. Often exploration spending lags metal prices by 12 months or more. Natural Resources Canada estimates, as you heard from the ADM's Alex Smith and Premier Fury this morning, that exploration spending in Newfoundland and Labrador will reach $223 million this year. That's up marginally from 2023, and it's down from the $260 million spent in 2022, but gold exploration in the province in the last few years continues to be strong and has a strong outlook. Copper. The global copper industry has revenues of around $245 billion US per year, and that makes copper the most important of all the critical minerals. What will Canada's future be in the copper industry? On the top left, you can see there's been a notable increase in Canada's resources over the last decade, and they've been countered by an equally notable decline in the mine's known copper reserves. And that mixed story tells us two things. Firstly, we need to reverse the decline in copper reserves, otherwise our national copper mining levels are currently only mine 2.2% of the world's copper. They'll become inconsequential. And secondly, the rate of conversion of copper resources to reserves are a more stringent classification than resources, that's falling well behind the rate at which we are mining those reserves. We must find ways to rapidly accelerate the conversion of resources to reserves. And on the lower right chart, you see more ups and downs. The copper price is up, while Canada's copper production has dropped nearly 30% in the last decade, matching the decline in copper reserves. Again, if we don't boost the discovery rate of resources and their conversion to reserves, this trend will continue and our copper mining business will become inconsequential. In the past 20 years, does anyone know how many new mines of critical minerals have opened in Canada? Any guesses? The answer is 4. As Natural Resources Canada shows, since 2005, only 4 new mines that can feed the electric supply chain have come online in Canada. None were copper mines. How many new critical mineral mines do we need? This chart from Natural Resources Canada suggests the need for 24 new mines by 2036. And yet, recent estimates from the S&P suggest that the timeline for mine development in Canada, that's from discovery to production, that timeline has slipped to 28 years, which puts us just about at the bottom when compared with other nations with commercial mining industries. So Canada's natural wealth is at risk with declining investment in early stage exploration, declining reserve and production capacity, and continued protraction of development timelines. All of these factors have put Canada on a track that will take concerted efforts from both governments and industry to change. So what do we do? The PDAC has 9 committees that are involved in advocacy on behalf of our members. Today I'll look at 2 of them, the PDAC Finance and Taxation Committee and the PDAC Securities Committee. For the Finance Committee, top of the list is the Mineral Exploration Tax Credit, the basis for the creation of flow-through shares. To provide a stable framework within which our members can plan their activities, we need the government to return to renewing the METC for 5-year periods. We advocate for other adjustments and realignments of tax policies to enable our members to plan their activities more effectively. There's one tax issue that's particularly important to investors in flow-through shares. And that is that sellers of shares that you acquire through a flow-through transaction, you must pay capital gains on that, assuming that you got the shares for free rather than what you actually paid. In securities and regulatory affairs, we advocate to reduce the paper burden for junior companies with respect to the financial and environmental reporting, and we support the continual review and revision of National Instrument 43-101 to better reflect technical realities. You'll hear more about these initiatives at our convention, which is the event of choice for the global mineral mining and exploration community. Next year, we will build on the successes of PDAC 2024. This year, over 26,000 attendees came from 138 countries. And actually, I wonder, I don't think there's many people in this room who can even name 138 companies. That was a remarkable achievement on the part of staff. They gathered to meet with experts, to network with peers, and explore new opportunities for collaboration. PDAC 2025, our 93rd annual event, promises to be the most dynamic and expansive yet, spanning over 600,000 square feet of the Metro Toronto Convention Centre. So whether you're an experienced executive, an emerging professional, or a student wanting to break into the field, PDAC 25 has something for you. Sustainability focus, Indigenous relations focus, and critical minerals development focus, with a vibrant trade show, a sophisticated technical program, and the awards gala and nightcap. We nurture the next generation of mining professionals through initiatives like the Donald Leishman Student Convention Experience, the Student and Early Career Program, and the new Indigenous Ambassador Program. Click on pdac.ca/convention and join us in Toronto from March 2nd to 5th next year. And I look forward to seeing you there.